Each day, I try to explain a little bit about why I think home loan interest rates are going to be coming down here in the first and second quarter of 2022, and basically talking about where the rates are right now and trying to educate or show kind of my logic as to why that is the case. Let's take a look here in just a minute at some very basic reports that came out that continue to make me feel confident in my expectations. Today is November the 22nd, 2022. It's 4:02 p.m. Central Time, which means the bond market is now closed for the day. So we actually get to see how the market ended here in this report. So let's take a look again. I mentioned that we're going to look at a couple of items. So just very basic information. So CNBC front page right now. Okay, so the Dow closes nearly 400 points higher as Wall Street bets on easing inflation and smaller rate hikes. So everyone is starting to kind of say, yeah, it looks like inflation is subsiding and that the Federal Reserve will probably have reason or they'll have room to increase the federal funds rate by 0.5% or 0.25% rather than 0.75%. So basically, they're starting to taper their aggressive nature or their behavior in order to try to bring down inflation because they think inflation is starting to come down. Now, let's take a look here. Again, other things you have to tie together. So if you look at this article here, Biden administration to extend the payment pause on student loans until after June or when legal challenges resolve. Okay, so a couple of other reports today come out, and all this ties together. And this is why I continue to be confident that rates are going to come down. So a report comes out today that says that currently the average U.S. Consumers savings rate, so the amount of savings that the average American has in their bank account, is at the lowest it's been since I believe it was 2008. It was 06 or 08. Okay, so savings rates are dwindling quickly. At the same time, different report shows that consumer debt, so credit card debt, is going up faster than it has ever gone up before. So you got to put all of this together. You have Biden saying that he's going to extend the student loan pause. So no one's paying their student loans. Savings rates are dwindling to nothing. Credit cards are going through the roof. Eventually, you're out of savings and credit cards are maxed out or they're getting maxed out, and you have to slow your spending tremendously. So all of these things, it's this tidal wave that is coming to the economy basically slowing, which is going to bring inflation down. And I don't think it's going to bring inflation down slowly. I think it's going to start to really come down as people have just ran out of money. But right now, they continue to spend money because of what they're accustomed to. They don't want to slow the spending that we've experienced really over the past 10 years of having a great economic run, and especially after having the government put billions of dollars out into people's hands that they then spent on things. And, you know, some people made money in the stock market and things like that. And that kind of seems to be over. So what does that mean to the home loan interest rates right now? Take a look at where we are based on these reports and what they've seen. We're up 31 basis points on our mortgage-backed security that we look at each day, which is great news. We really wanted to see that. We're down 10 on the 10-year, which is also, we're down 7 on the 10-year, which is also very helpful to mortgage-backed securities. Look here at, this is the 10-year Treasury chart, staying below the 50-day moving average and really pushing away from that today, giving us a little bit more distance from that ceiling of resistance, which is actually helpful to us on the 10-year Treasury. Let's take a look over here at the mortgage-backed security that we follow, and good news there as well. So look at how we've been battling this Fibonacci level for, 6-7 days, right? And at this point, we did close just above this Fibonacci level here. That's at 100.534, and we closed at 100.56. So just above it, but this is good news because if we can continue to close above it, it will allow this Fibonacci level to become a floor of support. So if you watch this show regularly, what would you think home loan interest rates have done today, going up 31 basis points and now breaking above the ceiling that we've been battling with? You would think that home loan interest rates have improved. Okay, the reports that we saw, indicators of inflation subsiding. Okay, those are all good things. So let's take a look at where we are on our Brent Bruce Daily and talk a little bit about that. So here we are. Let's go with the Brent Bruce Daily conventional 30-year fix, very well qualified, 800 FICO score, 25% down, perfect client. Okay. Yesterday we were at 6.5% with a little bit of a credit, and we could get to 6.375. I think that it was costing $800. Here we are. 6.5% is still the no point rate, getting a credit of 1,231. So that's gone up. The credit's gone up a little bit there. To get to 6.375 is costing $7. Okay. So clearly we would be offering 6.375 today to our very well qualified conventional client. However, based on what I saw today and having a 31 basis point increase, I would have expected that we would have been very easily at that 6.375. So why didn't the banks give us that 6.375 today? Because they are holding on to some of their profits. Because tomorrow, the report that's coming out tomorrow could be detrimental to the mortgage-backed security market. If that's the case, they don't want to be behind the eight ball. This is another time when they're kind of holding on and hedging some of their bets, not knowing what's going to come out in the minutes from the last meeting of the Federal Reserve. Usually when the minutes come out, it is not helpful to the mortgage-backed security market for the past few months or even years. So they're anticipating that mortgage-backed securities will fall tomorrow based on the report coming out, or the minutes coming out from the last Federal Reserve meeting. So they're basically hedging their bets, not giving us that 6.375 today, just waiting to see what happens. So again, I'm only pointing that out because you begin to see the logic that we put into why things occur. So do I think that 6.375 should be our rate today? I do. But I think they're hedging their bets in front of the report that we are going to be having come out tomorrow. A lot of information here, but as you can see, this is how this all plays out. This is how this stuff works. I will continue to try to educate you. I'll let you know what happens with the minutes tomorrow. I will keep you posted. Let me know your thoughts, questions. If you have anything that you want me to educate on, make sure that you like, subscribe, and share to the YouTube channel, and I will get back with you again tomorrow. Have a good one.